can I ask you another question?
An awkward question, is that what you said?
Yeah, you want an awkward question? No, no,
Why
no.
not?
Another.
Oh, another, yeah.
I interviewed Chris Peruna. I don't know if you met him before.
I've seen his site. I've never met Chris, though, but he does some good work.
Yeah, what I like about him, he also, I guess, like you, tries to keep it simple. So, do you use, for example, moving average? Do you use MACD, RSI indicators, or what's so special about your book, your trading method?
Well, what I focus on is I focus on, price first and foremost. The only thing that is going to pay us is price, and that's what's most important. We can look at volume to measure the psychology of the market and try and figure out, well, it's on light volume and that sort of thing. But volume is important, I think, more for individual stocks and the moves they're making there than it is for, it was a low volume day today, but the market was up 3%. And, if the market's up 3%, you're still making money on the long side, then that's great. If you're short and the market was up on light volume, it still hurts. So I look at mainly price. I look at volume. I look at moving averages, and most importantly, I think, is really the use of multiple time frames. If you're going to be a short-term trader, day trade, swing trade, you can't just look at a daily time frame. You have to look internally and see what's happening. Put the market under a magnifying glass, and then put on these different time frames. And I have tab charts that I think people have probably seen in the videos I do and that sort of thing with probably about 13 or 14 different time frames that I can just quickly look at for any stock that I'm interested in, so I can get a clear sense of who's in control, the buyers or sellers. So price, volume, moving averages. I put moving averages on each of those time frames, and there are different ones for different time frames. But the moving averages aren't there for a system. They're there for more a reference point to try and, again, tell us who's in control. Is it the buyers, the sellers, or maybe it's at a more neutral area where it's just kind of a back and forth fight between the buyers and sellers, and there's no real clear control. So, I mean, that kind of sums it up a little bit.
Yeah. Okay. You're also using some VWAP indicator. I did this interview for our beginning traders, so can you explain to our listeners what's so special about this tool? Because it's kind of an advanced tool.
Yeah, well, right. It's a tool that I started using about 4 or 5 years ago, and it's probably 5 or 6 years ago actually. The volume weighted average price, or VWAP, is it's the average price over a certain period of time adjusted for volume. So let's just take a real simple example. If we had 100 shares trade at $10 a share, or 500 shares trade at $9 a share, the $9 a share, there was $4,500 worth of trades there versus just $500 worth of trades at the $10 level. So there's more activity at that level. So what we'll do is we'll add the 9 plus the 10 and divide it by 600, which was the overall volume for that example that I just gave you. And then we would get a calculation of, I guess, probably $9.20 or $9.18, right around there. So that would be the volume-weighted average price over those two periods. And as the day progresses, we can see that who really is in control of the market, the buyers or sellers, based on what is the average price paid during that day and what's the trend of the volume-weighted average price. So I'll look at it. I think it's extremely useful for looking at a 1-minute chart for one day. As the day progresses, keeping an eye on who's in control, where that battle's fought. But I also use it for longer-term time frames as well. If we look at since the March rally began in this year, what I'll do is I'll look at what's the average price that the market has traded at. So I'll from that point, from March 7th or whatever the low date was there, I'll use the volume weighted average price tool, and it can tell me that, for instance, the average price in the SPY, we're trading at 93 right now. The average price was about $86, and we have never been below that. So as the market has been moving higher, and then just recently still held above this really widely advertised head and shoulders pattern, the buyers were still in control from the March lows because it was above that average price since the March bottom. So if it breaks below there, then I think we have a shift back to the downside. But for now, the buyers remain in control. So volume-weighted average price just kind of tells us who's really in control of the market, who's got the upper hand. The